In today's webinar, I'll go through a quick intro of ChemQuest for those of you that don't know us, and then I'll talk about the actual report itself and the contents of the report, then transition into what the coatings industry did in 2024, looking at macro trends and drivers, and then forecasting 2019 through 2029, focusing on 24 through 29 for the decorative architectural, OEM, and special purpose coating segments. And then I'll close at the end with a few comments. For those of you that don't know ChemQuest, we are an international business management consulting firm, over 130 people spanning the globe. Our consulting practice breaks down into 4 consulting practices under the ChemQuest Group umbrella. One that's dedicated to business strategy, a second that's dedicated to technology development, where we have 3 labs that we operate. A third is around operational and manufacturing excellence. And then the fourth is around M&A advisory services, both on the buy side as well as the sell side. Relative to the upcoming global market analysis report that's available on the American Coating Association website right now, essentially the report covers the historical 5 years moving forward into the next 5 years from 2024 to 2029. I'm very pleased to say that this edition, we got tremendous amount of participation and collaboration from all 20 of the World Coating Council member trade associations for the paint coatings industry, as well as our own proprietary tracker dashboard information and considerable amount of primary interviews that were conducted across the board with raw material suppliers, manufacturing companies, end users. So for making for a very comprehensive 850-page plus report. The report itself breaks down into various market chapters across architectural, OEM, and special purpose, and then looking at the 5 main regions: North America, which we're defining here as US and Canada, Europe, Asia Pacific, Latin America, where Mexico is included into Central and South America as well, and then Middle East and Africa. In terms of the market chapters, it begins for each chapter with a market scope, or a chapter scope, I should say, and then going into the market overview in terms of the sector overview, the sector analysis, regional distribution, by end use, competitive landscape, and then a lot of quantitative data, looking at the economic indicators that impact these markets, as well as trade influences, and then move into technology overview, a 5-year forecast, and then for each chapter, important takeaways. In terms of the content, similar content across all regional chapters as well. So by geography, we go through the exact same kind of delineation within each region. In addition to that, we do have for this edition 2 special chapters. One focused exclusively on coil coatings, including coatings for aluminum extrusions, and the second for powder coatings. And then we have 2 additional special chapters, one that talks about raw material feedstocks, their dynamics and trends, and the second around global M&A activity. In addition, all purchasers of the global market analysis will receive the bonus of a full day of virtual consulting with ChemQuest. And additionally, the purchasers of the US market analysis are eligible for a discounted price. So, okay, let's dive into the actual summary of the report itself. And what I'm going to be sharing with you here are snippets. Obviously, there's a lot of information that's in the 850 plus page report, but I'm just going to give you a feel for the types of information and the depth of information that's there. First, let's talk about where we finished in 2024. Essentially, we finished transcended through $200 billion global milestone. So we're at $202 billion, roughly 49 billion liters. Of that, architectural represents about 57% of volume and 42% of value. OEM about 30% of volume and 34% of value. And special purpose, less than 15% of volume and 24% of value. Not too surprisingly, Asia Pacific, including the Indian subcontinent, is really the one that leads all coating sectors as well as regional size. In terms of what's happened relative to consolidation, so today our analysis shows that the top 10 global companies represent about 45% of all coatings, and the top 100 about 80%. A lot of deals that have taken place. So of the total 43 M&A deals that were transacted across the globe between 2022 and 2024, 80% of those took place in Western Europe and North America. In Asia Pacific, about greater than 80% of the demand is served by the top 100 companies, and actually by the top major companies. In Latin America, it's greater than 90%. In Middle East and Africa, it's about 50-50. So looking at the M&A side of the equation, you could see that the period from 2015 to 2024, the last 10 years, was the largest in terms of number of deals, albeit the last 2 years, the M&A transaction slowed down considerably, particularly second half of 2023 and all of 2024, and it's still relatively slow at the moment. So 43 deals total transacted in that time period. In terms of value of transaction, $29 billion, it's not the highest, and that was heavily impacted by what's happened the last couple of years. Prior to that, the highest peak was in the period from 2005 through 2009 period at 35 billion approximately in transactions. So the chart on the right-hand side shows you 80% being in Western Europe and North America, and then the other split across the rest of the world. Because of high interest rates, because of highly restrictive covenants as a result of the high interest rates, and that essentially manifested itself in multiples falling about 2 turns, from 13.5 times EBITDA for large caps to about 11.5 times EBITDA, and for small, medium-sized enterprises, multiples have ranged from 5 to 9x, and that really varies by where you play, your growth profile, the margin profile of the business, and a number of other factors, but those three really being heavy emphasis on those three in particular. In particular, what we're seeing today is conglomerates looking outside of the US for their acquisitions because of the amount of consolidation that's taken place. So globally, they're highly active, but in the last couple of years, because of the restrictive covenants and the interest rates, they've really focused more on re-examining their strategic aspects of their portfolio. And this particular slide shows an example of that. For example, PPG most recently being the illustration of what I'm describing, where they carved out the North American architectural business for US and Canada and sold it to a private equity firm by the name of AIP. And then the chart on the right-hand side shows you the number of deals by region that took place. What's driving essentially the consolidation, and will continue to do so in the foreseeable future, is the fact that the coatings industry is demonstrating mature growth. It's pretty well tied into to GDP globally, and so people are looking for M&A to plug gaps in their technology from the standpoint, innovation standpoint, ability to expand geographically, or to look at ways in which they can plug gaps from the standpoint of end market participation, all based on how their strategy is lined out over the next 5 years and methods in which they can plug those gaps. Also active in the space are a lot of private equity firms because they really like the risk profile of the coatings industry, low risk, high cash flow conversion, low intensity of CapEx, loyal customers. All of those are factors that continue to drive interest by financial firms. The other factor is really more applicable towards US and Canada, and that is the market is so consolidated there that there are very few mid-market players remaining. So you have this bimodal distribution of large cap companies, the top 5 companies in the US, and then a very long tail, 300 to 400 some odd companies that would fit into the category of small to small medium or low mid-market kind of players. And so they see an opportunity here where they can buy small, build it up through a buy and build strategy, build it into a mid-market player, and then sell it to a major player. Most recent example of that is Arsenal Capital last year sold their Seal for Life platform after going through 5 years of building up that platform, became a mid-market player, and sold it for a relatively high multiple to Henkel. So as we move into the report itself, in terms of the market participation and the breakdown of those markets, I'm going to show you a couple of charts. First, showing you this MECA chart that shows by region, architectural at 85 billion in 2024, OEM at approximately 69 billion, and special purpose at 48 billion. Another way we could show this, and I truly apologize for the eye chart, but simply as a matter of illustration, I wanted to be able to show you that the breakdown in each of these regions is also by major country within those regions. As you see across the bottom, for example, looking at Asia Pacific, almost 100 billion of the 202 billion, you've got China, India, Japan, South Korea, Australia, and so forth. And then the same in North America, US and Canada, the same in Latin America, and then across Western Europe and Middle East and Africa. Some observations important to point out. First, when you look at the breakdown by end market participation for North America and Europe, relatively speaking, it looks very similar. 37 billion for size of markets in each one of them, you know, slightly different, but relatively in the same ballpark breakdowns in terms of the end market participation. But look carefully at the unit price. North America at $6.70 per liter compared to $5.10 per liter for Europe. Don't be fooled by that. If we bifurcate Europe into Western Europe, it looks a lot like North America. In fact, the price is a bit higher than North America versus Central and Eastern Europe that drags down the price to the 5.1 or $5.10 per liter there. In contrast, when you look at the developing regions, you've got Asia Pacific, Latin America, Middle East and Africa, all of them hanging at about $3.50 per liter. Obviously, size is very different, with Asia Pacific being $100 billion, the other two each being roughly around $12 to $15 billion. In this report, we also look a lot at economic indicators, and those being influencers on what's going to happen in terms of end market growth, as well as the trends and drivers that are driving demand and growth in each of those areas. But at a macro level, we really keep track towards 8 particular drivers. There's a lot more when you get into each chapter, but at a macro level, 8 of them. Construction growth, extremely important. When you think about construction growth and you look at architectural and you look at protective types of applications for building and construction, roughly speaking, construction represents about 2/3 of demand for coatings. It also represents 40% of global emissions, which is why it's a big target for regulators. Disposable income in developing countries is a very good indicator. As the middle class transcends, it begins to drive demand, not only in architectural coatings, but also drives demand in a lot of trickle-down economics that are OEM and field applied. So, for example, more cars are purchased by middle class. That helps OEM, but it also drives collisions. More furniture with housing, more appliances, so on and so forth. So that's the reason we keep track of this particular aspect. We see an awful lot of environmental regulations becoming stricter. The most recent example being, in my opinion, a significant overreach by the EU Commission, where they're trying to define all polymers as microplastics. And when you think about all of the different types of polymers that we use, from acrylics to epoxies to urethanes to polyesters and so on and so forth, in the coatings industry, defining all of those as microplastics is going to be very, very challenging for the industry. So that's something we're keeping a very close eye on. Consumer awareness of product safety, in particular, driven by what happened during COVID, and now the implications of those on product performance as well as regulations. Supply chain changes, seeing a tremendous difference because of the disruptions and volatility that we saw during the last 4 years, moving from just-in-case inventory to, from just-in-time inventory to just-in-case inventory, and either reshoring or nearshoring the critical products to reduce shipping costs and also make sure that they're closer to home. Material substitution, not too worried about that particular aspect. We're not at risk from those areas, but we do see some material substitution impacting a couple of areas. So, for example, the open floor concepts that we see being popularized across the globe, essentially providing for fewer paintable surfaces within the home and also within office space. And on the industrial and specialty side in particular, we start to see things like clear and color overwrap films on vehicles that are impacting OEM as well as refinish applications. In terms of market consolidation, this market continues to be ripe, albeit less so in North America over time because of the consolidation that's already taken place, a lot more so in Europe and Asia. And then finally, from the standpoint of labor shortages, really impacting the industry from the standpoint of use, higher degree automation, higher degree of robotics across the board, as well as product innovation from the standpoint, faster turnaround, faster return of service for expensive assets. There are many, many economic influences that we evaluate. I'm just going to give you a taste of a few. So one of the most important ones is GDP. The coatings industry correlates at 99% R squared with GDP. So to that extent, that's one that we always follow very, very closely. As we look at 2024 through 2029, year over year GDP growth is forecast to be roughly 3% globally. That varies at 4% for Asia Pacific, 3.5% for Middle East Africa, But when it comes to Europe, the slowest at 1.7%, and North America at 2.1%. We also look at building and construction trends. I mentioned earlier that makes up close to 2/3 of demand. So building and construction trends are very important. And here, when you look at the chart on the right-hand side, the picture explains it very well. There's approximately $2 trillion of growth forecast for Asia Pacific, primarily because of the boom that India is experiencing today, driving growth. Likewise, China with all of the government investments, but China is now also being challenged with overbuilding, property developer defaults, and low demand for housing because of China's aging and declining population, and also being hampered by other factors as well. The $2 trillion in Asia Pacific forecast for the next 6 years is more than all of the other regions combined. Likewise, we track oil and gas trends. That's very important for industrial maintenance, protective and marine applications. And what you could see here is that over the next 5 years, oil supply is going to surpass demand, and the primary reason for that is the impact of renewable energy taking market share more and more over time, particularly true in Western Europe as well as Asia Pacific, and led primarily by China within Asia Pacific, with really a big drive for renewable, not only from the standpoint of wind, but also solar, hydro, a number of other facets. When it comes to the oil and gas value chain, what's important really for coatings is the upstream, midstream, and the refining part of downstream for crude oil, but upstream and midstream for natural gas. This chart shows you really the growth globally of renewable energy, and the biggest factor there driving that being China, as you can see with the chart on the right-hand side. Understanding global automotive OEM or global vehicle production, I should say, not just automotive, but all classes, because there's so much from the standpoint of tier 1, tier 2, tier 3. Frankly, when you look at end-use market participation and look at the transportation uses of coatings and combine them with those that come in from powder side, those that come in from the coil side, you're looking at essentially 1/3 of OEM being driven by transportation-related value chains. And so here, as you look over the next 5 years, what you're seeing is roughly a 2% compounded annual growth rate, steady, not fabulous, but steady, approaching 100 million vehicles produced globally, with EVs really driving a lot of growth, and primarily because of China. EVs today make up about 18, almost 19% market share, and that's going to continue to grow. Likewise, as you look at other transportation sectors, so on the left-hand side, you're looking at airline growth and air passenger growth as well, and then rail growth on the right-hand side. Regulatory environmental influences are also extremely important to us. Today, they're really being driven by 3 major aspects, one being sustainability and carbon neutrality, driving across the globe. And there's a distinct difference between what we're seeing today relative to this versus what we saw in the last 20 years. In the last 20 years, it was more a market push, trying to push these things because of regulations. Today, what we're seeing is a market pull, where investors, end users, particularly millennials, Gen Xers that are in the next generations of consumers asking for that and demanding for that. And so that market pull is really driving sustainability and carbon neutrality. Also from the standpoint of stringent VOC limitations, PFAS, lead and heavy metal, just an expanded list of substances for very high concern, particularly those that are related to persistent bioaccumulative and toxic compounds, biocides, and as I mentioned earlier, microplastics, which is the new challenge that we're facing. And then from a regional standpoint, China being the largest greenhouse gas generator has really taken the most aggressive steps, leading the world in terms of renewables. Europe has the most stringent regulations from the standpoint of VOC. North America follows Europe, but North America is now leading relative to PFAS and biocides. And then there's a number of economies around the world that are adopting lead standards, but frankly, over 70% of UN members either don't have them or have inadequate lead standards there. And then microplastics becoming the next to frontier. Technology and innovation-wise, really the technology in the coatings industry is being driven primarily by the mega trends that we're tracking across the globe. So global health, digitalization, mobility, sustainability that I talked about just recently, and climate change. And if I look at some of the trends and drivers there, sustainability today is really increasingly synonymous with circular economy, focus on the renewable energy, elimination of toxic chemicals, waste reduction and recycling. And as I mentioned earlier, there's a market pull, this shift of sustainability initiatives that need to be tracked. So metrics for them that can be tracked and published to demonstrate that the players, the major players in the industry, actually the entire value chain, is moving in the right direction. And that's leading to ESG mandates on climate disclosures. And then we're seeing a continual shift towards waterborne, high solids, and powder coatings. As you can see on the right-hand side, what's happened in the last 10 years from 2013 to 2023 relative to powder and waterborne at the expense of, as well as high solids at the expense of solvent. But there's still much work to be done. When we did the analysis over the past year, you could see across the board, the bar chart, the stack bar chart on the right-hand side showing all end uses, that approximately 30% of the market is still solvent-borne. But when you look across the breadth of some of these applications, a lot of them are in either marine or protective or many different OEM end uses. You could see that range is anywhere from 30 to 50 to 80% still being solvent-borne coatings. So that's where I see a lot of regulations being impacted in the future. Technology trend-wise, there are really 5 major themes in terms of technology trends. One around low VOC and low toxicity coatings, another being around energy, labor, and doing things more efficiently in terms of either temperature cure or application efficiency. Clean energy, particularly in Asia Pacific, Europe, and Middle East and Africa. And then renewable raw materials, bio-based raw materials. And then the 5th being artificial intelligence, which is the newest frontier here, ranging anywhere from machine learning to drive efficiencies and powder coating applications to selection of color palettes to various robotics. Certain ones I wanted to highlight in each of the areas. So in decorative architectural, unique applications relative to conductivity, touch a wall, lights turn on, touch it, lights turn off, or multifunctionality that we're seeing. Examples from odor absorbing, radar blocking, antimicrobial, antiviral, self-healing, denox, self-cleaning, on and on and on, asking for that coating to do a lot more than just look good, have good durability. It also starts to bring in other aspects like warmth and feeling good as well. On the OEM side, the popularity of matte finishes. Personally, I'm not a fan of those, but they're obviously very popular because we see them everywhere. Solar heat management from the standpoint of darker colors or increasing passenger comfort or reducing external substrate temperatures. Powder coating resins with 40% post-consumer recycled PET from end-of-life packaging. Low temperature cure applications. I can't emphasize enough faster return to service of assets, particularly in protective and marine and offshore applications. These assets are extremely, extremely expensive. So any technology that improves returning that asset to service faster, huge value proposition for it. We're also seeing a big use of sensors that are embedded into coatings that are monitoring the structural health of an asset to either extend the asset life or reduce the maintenance of it. Imagine sensors being embedded on a pipeline that's remote, connected through the internet, where you have a break in the surface that could ultimately lead to catastrophic corrosion and a break in the surface, but the asset owner getting much faster communication that this has taken place so they could use it. Corrosion protection in extreme environments, from jungle conditions to Arctic conditions. Safety and fire protection becoming very, very important, particularly driven by the insurance industry. Longer pot life and shorter curing. And then, as I mentioned, automation because of labor shortages across the board in all aspects, from R&D, like machine learning, to manufacturing, to applications. In terms of coating growth trends from 2019 to 2029, and I'm focusing now looking at, I'm going to comment mostly on future. You've already experienced what's happened in the past, but at a overall aggregate, what we see in the coatings industry over the next 5 years through 2029, on a volume basis, approximately 3% growth, which is the very bottom of the charts. On a value basis, about 6% growth in value. But as you look at these regions, the fastest growth on a volume basis really is Asia Pacific, followed by Latin America, then Middle East and Africa, then North America on a volume basis, Europe being last at 1.8%. On a value basis, nearly all regions, with the except Europe, growing at 5% or higher. Europe being at 4%. When we look at it from the standpoint of markets, architectural over the next 5 years growing at 5% in value, OEM growing close to 5% at 4.8% in value, looking at the various end market segments there, and special purpose growing at approximately 7% in value. Particular emphasis, I want you to look at the protective chart and look at powder coatings, those being the fastest growth amongst the entirety of the market, at 7.5% for protective and 7% for powder coatings, again signaling a shift towards more environmentally friendly products. So the past 5 years, we went through a tumultuous period, trifecta with COVID, catastrophic weather events, geopolitical issues, Europe and North America were hit the hardest. They were also the slowest to recover. Impact on material shortages, rising interest rates, Europe's dependence on Russian oil, really impacting their energy prices and high inflation. And Asia Pacific recovered the fastest, primarily because of government subsidies for production of low-cost export materials, and also EV, and India's booming economy. Middle East Asia also had a lot of public sector investments in building and construction, as well as oil and gas, and wind and solar. Latin America saw a quick uptick because of the dislocation of supply chains. Latin America became a very good resource from the standpoint of nearshoring, not only for North American companies, but also for Latin American companies and European companies alike. Over the next 5 years, we're forecasting a steady 3% volume growth globally and about 6% growth in volume, the industry reaching about 267 billion in sales. Continued consolidation, increasing consumer preference for eco-friendly and sustainable products that I mentioned before, a lot of opportunities for automation and artificial intelligence, and essentially all coating sectors growing at approximately 5% or highest. When I look at decorative, picture tells a lot in terms of the left-hand side historical view. We've seen decline in volumes globally and slight steady growth in value, a lot of that being mostly inflationary. And then what we're forecasting going forward is on the right-hand side. But to summarize that here, on the left-hand side, looking at historical 5-year compounded annual growth rate in volume at about 0.5% per year, 5% for value. Globally, that's been impacted by remote work. And frankly, the remote work wound up pulling demand forward from future years into the COVID affected years, 2020, 2021, where people spent a lot of time DIY type of work and making office space for themselves, as well as nursery space for their children and things of that nature. We saw an initial drop in pro coating sales, but regained that share very quickly. Mortgage rates, as well as inflationary pressure on housing prices, has kept housing prices very high. Inventory is low, and so the demand for housing really outstrips supply at the time being. Very strong demand for housing. Supply is very short because of the fact that people can't afford, the affordability index being very, very high. So from the standpoint of regional trends, Asia Pacific dominated the market. They represent 35% of the market in terms of decorative, and only saw about 1.7% volume growth. Europe and North America declined during that time period overall. Over the next 5 years, we see, like I said, about 3% volume growth, 5% value growth, getting above $100 billion, and demand really being driven primarily by Asia. When we look at OEM coatings, the picture is quite similar in terms of volume and value. And what we're forecasting here going forward is about 3% volume, about 6% in value, compared to a decline of about 0.3% in volume in the past 5 years, and only about a 0.3% in value growth during that time. Automotive and construction were being the most severely impacted. And obviously the impact in housing also impacted all the trickle down aspects, furniture, appliances, so on and so forth. Regionally, Asia Pacific is going to continue to drive growth. And in terms of future growth, powder coatings, waterborne coatings, automotive and transportation being major drivers, particularly in Asia Pacific and Latin America, as well as wood finishes across the globe. Special purpose, different story, continued to grow with the exception of the slight decline during COVID and the quick recovery, continued to grow and expand on a value basis. So over the past 5 years, 2% steady volume growth year over year, about 5% value growth, forecast to grow at 4% in volume and about 6.5% in value over that time. And auto refinish, expected strength across all regions, particularly Asia Pacific, because of the rising middle class and the demand for more cars. Marine coatings expected to grow over the next 5 years with all the major shipbuilding regions showing good growth. Protective coatings being a highlight across the globe for infrastructure as well as energy-related activities, as well as activities related to AI and all of the data centers that are going to be built around the globe. I want to finish by giving you a quick overview. We talked about the coatings industry being about transcending through $200 billion. The top 10 players now representing about 45%, the top 180%. Global coatings, we're expecting 3% growth in volume and 6% growth in value approximately, reaching $267 billion in demand by the end of 2029, and sustainability being a big driver for demand going forward from the standpoint of waterborne powder coatings, demand for energy efficiency, and also eco-friendly, low toxicity, and growth and protective for renewable and EV and infrastructure. We do have a very bright future, in my opinion. Within the last 5 years, we've been uniquely challenged. It's been a tumultuous time period. In the 45 years I've been in industry, we've not seen anything like we saw in the last 5 years. But we continue as a value chain, as part of the value chain that we play in, from raw material suppliers all the way to our customers. We continue to outperform the value chain. We deliver consistent EBITDA margins that are greater than 15%, return on invested capital ranging from 13 to 18%, low capital intensity of less than 0.5% of revenue, very high free cash flow conversion greater than of 95%. And we continue to drive innovations across the coatings industry. We talked about a great number of innovations in terms of multifunctionality here. The industry continues to have very favorable industry dynamics, low cost in use, specification driven, differentiated products and portfolios, high touch technical and application service requirements that have important and high consequences to cost, which means high cost of failure. And that for us is really what protects the industry from substitute technologies. So we have high substitution cost and longer sales cycle, but very loyal and sticky customers as a result. And finally, this report is available right now. You could see the global market analysis. You can also see the combo deal with the US market analysis in the bottom row. So for non-members, the prices are $7,500 for single user, $13,500 for single user for combined both studies. For ACA members, the number is $3,200 and $5,750. And for corporate licenses, it's $10,000 for the global market analysis and $15,000 for a combination deal. And with that, I'm going to stop talking and open it up to questions.
Thank you, Dan. We do have a few questions for you. Let me start with the first one. How will the new U.S. administration policies affect growth in paints and coatings, addressing tariffs and labor market in particular?
Still to be seen. But I'm sure everybody recalls what happened when this administration was in power up until COVID, if you would, and the impact of the tariffs then. There are a couple of schools of thought here. One is an obvious one, which is this is just a lot of bluster trying to position for negotiations. The second is looking at it from two perspectives. First, within North America, Canada, Mexico, trying to stem the flow of Chinese products, companies that are using Chinese raw materials or shipping back and forth China through their Canadian or Mexican subsidiaries where you've got free trade, and trying to plug those holes, right, if possible. The second aspect being tightening trade to bring more and more reshoring to the US, which has a much bigger impact on industry that could potentially impact inflation as well. So relative to tightening the northern and southern borders for products coming in from China, I see that as being extremely challenging, because today when we look at the raw material intermediates and even some polymers like liquid epoxy resins being an example, or polyols for polyurethanes, China still makes up about 60% of production, global production. Over the last 25 years, a lot of those assets have gone to China, and they've got the newest assets, lowest cost assets. And so it's going to be pretty tough for this administration to really impact that aspect. But you could see what they're trying to do, and it's not just the US. Europe is doing not quite to the same extent. They're really trying to decouple these supply chains and move them. So that's my perspective at the moment. Still to be determined, but it's going to have a profound impact on the industry.
Thank you. Other than the carbon footprint aspect, do you see climate change translate into new coating requirements and the new ingredient requirements?
Absolutely. Yes, we've already seen that. In fact, I think what you will find is that the number of storms, the volatility of storms, the impact of solar heat management, things like keeping surfaces cool, low energy requirements, all of those today are innovations that are in the coatings industry already. And I expect that that will continue to evolve over time. So definitely be a factor. Circularity is going to be definitely a factor. Use of bio-based materials as raw materials. And here's what we see, something that's very different. Historically, sustainability and use of bio-based or biodegradable materials or compostable materials, the attitude was, unless everything was bio-based, we're not interested in shifting. Today, what we see is an attitude that says we can evolve into higher concentrations. We can start with bio-based being 10% or 15% of the concentration. That's better than none. We can evolve over time as scale increases and performance properties improve, that we can move up to 25, 30, or even 50, and so forth. That evolutionary picture, I think, is very favorable long-term to drive the trend even further.
Thank you. Another question, based on your research, do you sense that customers of coating industries are willing to pay more for sustainability features only without any performance improvement or cost reduction benefits?
No, Not yet. There is an early adopter category that would pay maybe 5% more, but the criteria is that it has to perform at minimal equivalent to the incumbent products. They're not interested in equivalent properties. Sorry, excuse me, they're not interested in lower price at equivalent properties, or they may be willing to pay 5% more, maybe 7% more, higher price for equivalent properties, but they don't want to sacrifice properties whatsoever. And so that is problematic at this point in time, because bio-based materials simply don't have the scale of what we have in place for ethylene and propylene that's coming out of oil refineries, natural gas, cracking. That scale just doesn't exist yet. And so the raw material cost and the BOM costs for bio-based ingredients is far more than what consumers are willing to pay. And so that means shrunk margins.
Thank you. Is 2024 global coating sales of 202 billion estimated value or actual? What drove the growth from previous years? Price increases or actual volume sales growth?
Not volume. As you saw, volume was not a factor. What you saw essentially was price was a factor. And that price was a combination, well, it was really all inflationary, right? Because you had raw materials that increased significantly over that time period. When you look at something like epoxy, went up 300%. Now it's come crashing back down. Polyurethanes went up about 150%. Now it's back down on an inflation adjusted basis. All those raw materials went through significant spikes. And what we've been very good at in the coatings industry is the discipline that when raw material prices go up, we may not be able to pass those through as fast on the way up, but ultimately we pass them through. There's anywhere from 6 to 9 months lag usually in passing them through. But on the backside, we tend to keep margins. Yes, margins tend to shrink, but overall on a net basis, we gain margin over those kinds of time periods, over those cycles.
Thank you, Dan. We have one more question for you. The 5% more category, do you see that in just Europe or everywhere globally?
I'm sorry, I didn't understand. The 5%, which category?
It says the 5% more category. Do you see that in just Europe or everywhere globally?
The 5%.
Here, they added on the willing to pay 5% more.
Oh. No, that's really, I would say that's in the developed economies, right? Yes, there are unicorns in Europe. There are unicorns, I would say, in certain parts of the world. Japan, China comes to mind, for example. Denox coatings in China are more expensive. But the 5% I was talking about, just to be very, very clear, was the use of bio-based materials. And there, we're just seeing that across the board. Let's put the number between 5 and 10% max. I don't want to just make it absolute 5%, but it's certainly not enough to cover the actual raw material cost increases by using bio-based materials.
Thank you. Well, that concludes the webinar. I would like to point out we have 2 webinars coming up shortly. On February 20th at 1 o'clock, the Domestic and International Hazmat Transportation Regulatory Update. This webinar will be led by Rhett Cash, Counsel in Government Affairs. February 27th at 1 o'clock, Understanding Product Category Rules, Life Cycle Assessments, and Environmental Product Declarations. This webinar will be led by NSF. And International's Eric Finley, SCS's Global Best Cases, and ACA's Suzanne Chang, Counsel in Government Affairs. Thank you all for attending today. We will distribute a PDF of slides this afternoon, and the recording will be available soon on paint.org in the Members Center. Thank you very much, everyone.
Okay, thank you. Bye-bye.
Bye-bye.